Ex-Treasury Secretary Larry Summers called it the American capital flight trade. Bridgewater's Ray Dalio warns we're on the brink of the monetary order, where there's a growing risk the United States will increasingly be bypassed. A weaker US dollar and a sell-off in tech stocks signalling shaken confidence in American assets.
I think it's less an exodus rather than a change in destination for the marginal dollar. And I'm not entirely sure whether the administration desires this or not, but it does seem to be a consequence of their policies that, the marginal savings from Japan and Germany that have for decades been flowing into US assets, and that includes US treasuries and US equities, might, slow down in the sense of the flow. And that's to be expected, I think.
That's an interesting point you make about whether or not this impact on the US dollar or weakening of the US dollar is desirable or not. Can you explain why it would be desired by any administration? Because typically speaking, a weak dollar of any country is a sign that the economic policies are not playing out too well.
Well, I think the Trump administration has made it very clear that it would like to lower the United States trade deficit with the rest of the world, and a lower dollar could lead to U.S. products being more competitive and then therefore boost U.S. exports. I'm not sure that's where we'll end up, but that would definitely be viewed favorably if you were looking at the competitiveness of U.S. exports. The second component of this is the U.S. administration is trying to limit imports into the United States from other countries. And when you limit your current account deficit in that way, you're also limiting capital inflows. Now, I'm less sure the administration desires this, but it is kind of an economic consequence of the trade policy that's being implemented.
I'm interested to talk about net capital inflows. You obviously have a lot of clients around the world. What are they telling you? Are they selling their US assets or not?
I wouldn't be so frank with you as to tell your client's positioning, but I think general concerns in the market have been around, the level of valuations at US equities has been extraordinarily high over the past few years, and some people are viewing this as a healthy correction. What has been a little bit more concerning is the FX moves. So the dollar's movement, you would expect the dollar to appreciate when things become riskier, but that hasn't been the case lately. And I think that's baffling to quite a few people who trade in the asset class. And I think it's related to, what we're seeing, the dollar's role in the global financial system and how that's being challenged by the new trade policy here.
The IMF estimates non-American investors hold around 22 trillion US dollars worth of US assets, and more than half of the world's foreign exchange reserves are held in US dollars. So it seems wild to suggest the US dollar is falling off, but it's now part of the conversation.
I mean, it's certainly plausible to think about it. It's happened a few times in history where the world moved from one reserve currency to multiple reserve currencies and then coalesced around another reserve currency. Obviously, the last time this happened, the world moved from the pound sterling to the US dollar. This is generally a process that takes a very long time. I would expect it to take a very long time if indeed it is going to happen in the current circumstances as well. But what's clear is, some countries have been moving away from dollar reserves in the official sector. China is very notable there. Other countries have been moving to other assets. Gold is one of them. It has reappeared in the global financial system. And I think overall, there's very good IMF research on this. There has been a steady, small but steady decline out of US dollar reserves toward alternative currencies. And I think we should expect that to continue as the US's role in global trade diminishes, which I think is also one of the administration's goals.
It's very indicative of kind of what's happening in the world, right? With, I guess some people call it the end of globalization as we know it, but certainly a change in the world order to be more multipolar. So is it just realistic to assume that from here on out, as we head into that type of global economy, that there will be more currencies in the mix that we trade in?
I think for many countries, and again, China is a good example here. China has managed to switch much of its invoicing away from the US dollar to the renminbi. But the overwhelming majority of global trade still takes place in US dollars. And I don't think we can expect that to change in short order, regardless of how markets perceive this. But over the long run, you can see a situation in which trade moves away from the dollar in increments, and countries prefer to have alternatives to the extent that they can.
This isn't just about trade policy, though, is it? I mean, I know that you warned about weakening in the US dollar, and I think it was July last year. So you've seen this potentially playing out for a while. I wonder what else perhaps has played into current weakness or just pressure generally on the US dollar. How about previous administrations using it as a sanction regime? Has any of that played into this too?
I think it's true that multiple prior administrations have used the U.S. dollar's reserve currency status to impose sanctions on geopolitical adversaries, be that Iran, be that Russia, and it's kind of played out in both Democratic and Republican administrations. So that hasn't really changed. I doubt that has too much to do with the current moves in the value of the dollar. That is more of a long-term process by which, the more the United States uses the US dollar geopolitically, the less geopolitically neutral it becomes. So for some investors, it might be less desirable to have as much exposure to the US dollar as they have in the past, which, again, as with equities, is extraordinarily high.
Goldman's Valatsas has said that the US dollar still has further to fall. Do you agree with that?
I think Mr. Hatzius makes a very strong case for a weaker dollar. So analytically, I would agree. I think we could yet see a weaker dollar from here. And part of this is mean reverting, right? The dollar has been extraordinarily strong. So I would expect a mean reversion to to levels we have been more familiar with over the past decade or so. But the other point Hatzius makes is that people should not conflate a weaker dollar with a dollar that's lost its reserve status. These are two very different things. A weaker dollar has happened many times. It may well happen again. That does not necessitate the loss of reserve status.
Is there perhaps a figure that you believe the US dollar falling to in the US dollar world index that would suggest that its reserve currency status is at risk? Or are there other features of its place as the reserve currency that you'll be watching to signal that instead?
I definitely wouldn't spend too much time looking at price. I mean, there are monetary policy dynamics. Price is always related to what's happening in the rest of the world, what's happening in Europe, what's happening in Japan, what's happening in China, and certainly what's happening with US trade deals with the rest of the world. What I would be looking for is the dollar's share in international invoicing. I would be looking at capital flows, to the extent to which capital inflows into the United States go down, and I would be looking at official reserves. And again, here, the degree to which international central banks choose to move away from the dollar and toward other reserve or quasi-reserve currencies.
Other currencies are benefiting, specifically the euro, Japanese yen and Swiss franc, all of which have gained close to 9% against the US dollar in the last 3 months. But the greenback is still bolstered by the strength of military power and incredible companies pushing extreme innovation. Although above all of that, America's fiscal position is cause for concern, despite Doja's best efforts to cut costs. One thing we haven't spoken about, Dimitri, is the US fiscal deficit. How does a weaker or at least continued pressure on the US dollar impact the US ability to pay down that debt, including the $1 trillion in interest annually on top of it?
I think it will depend. It will depend primarily on interest rates. And I think the main determinant there will probably be domestic investors and savers, and what kind of interest rate domestic savers are willing to accept to invest in what many people would call an unsustainable federal debt pile. There is an international role there, and of course, if you see fewer inflows into U.S. Treasuries, that would have an adverse effect on the interest rate the federal government pays for its debt, therefore make the deficit harder to manage. But I think that's primarily a domestic consideration at this point.
I guess bottom line, the US is still, a manufacturing hub. It still has military strength behind the dollar. It currently is the home of all of the extreme innovations in AI. So if you consider those things, then it seems like US exceptionalism is not ending anytime soon.
If I had to bet, that's what I would bet. I think, there's still a tremendous amount of innovation taking place in the United States. I think there has been a long-standing concern about the current account deficit that this administration is trying to address. The degree to which it will succeed, we'll have to wait and see. I don't think it's very clear either way. But the domestic economy should continue to perform well. American innovative companies are not going anywhere. So I would remain optimistic that American exceptionalism should continue as a force in the world and in financial markets for sure.
Well, I'll be in New York in June, so perhaps we catch up on all this then.
Fantastic. Would love to see you then.
Thanks for watching Markets with Madison. If you enjoyed this interview, please hit the like and subscribe buttons below. I do all of the research for these episodes myself, so your support means a lot. I always love to hear your feedback and ideas, so please drop any thoughts in the comments below. Now go put your money to work.